All right, welcome to another episode of the Pinpoint Investor Podcast with Faz Morsi. I'm your host, Faz Morsi. As always, we are brought to you by Pinpoint Skip. Check out our motivated seller list at pinpointskip.com. Today's guest is Mor Milo with Relli, platform that I'm looking forward to digging deeper about. If you're a real estate investor, this is right down your alley. So thanks for being on, Mor.
My pleasure. Thanks for having me.
All right, so just to give people a caveat, you are in a hotel room right now, you're traveling, but you made time for me, so I appreciate it.
Yeah, absolutely. And my apologies for the not as pretty background. Normally, I'd have a very pretty background with an aesthetic picture and an image of the frame and all the things. But yeah, I'm out and actually in Dallas right now. We're getting ready to ramp up a new marketing campaign for a very interesting investment that we're excited about here in Dallas, Texas, for two multifamily offerings underneath one fund where our investors will have access to over 500 units and a sponsor that is incredibly well-rounded, has a 20-year track record, and is assuming a 2.2% interest rate from the previous seller. So it's a very, very lucrative deal. We're super excited to get on the board. I had to jet my butt over to Dallas as quickly as I possibly could so we could go get all this videography stuff done, and here I am. So
Nice.
thanks
Where are
for
you
your
based out of?
flexibility. I'm in Irvine, California.
Okay, nice. All right, so give people an idea, like, you kind of give them a little glimpse of like what you do, but like give people an idea of like what you do, what Relly does, and like how you got to where you are.
Yeah, it's been a journey to get here, no doubt. I'm a four-time startup founder. I have a phenomenal business partner that's been with me through thick and thin through all of those previous startups. And after three failed business attempts with partners that ended up not turning out, me and my ride or die business partner kind of looked at each other and we're like, all right, let's figure something out together. So we started looking at the market and realized that as retail investors, we didn't have access to passive real estate investments. We weren't considered accredited, which in the world that we live in today is really the kind of main audience for a real estate development firm for investment capital. And what we wanted to have a similar experience to what we had on the stock market through companies like Fidelity or E-Trade or Charles Schwab, or access to cryptocurrency like we have on Coinbase or Binance, but we wanted that type of experience where we could manage a portfolio completely passively on an online platform. But we wanted it with passive real estate investments that were of an institutional grade and quality. And that didn't really exist. So when we started doing research, we discovered that there were really only two camps that passive real estate investment companies would go down to attract investors. Either they were accredited investor platforms that were limited to high net worth individuals and institutions and had a very narrow amount of deals that they had a direct correlation to, such that they were trying to raise capital directly into those deals and they were biased, right? Or there were general partners that created what they call Regulation A offerings, which is an offering that an average consumer can invest as little as $100 into. And they would set these offerings up, which is awesome because an average Joe like me could invest, but you only had one asset manager to choose from. And usually you only had one or two or three different types of asset, all within the same residential pool that you could invest in. So you didn't actually have the experience of being able to pick and choose the asset type, the amount of investment, the structure of the investment, because you were limited to whatever that one sponsor had to offer. So we looked at the market and we said, okay, what would we want to create? And what we wanted to create was a stock market for real estate where we could have that same type of experience. So we decided to go down the path of figuring out how we could create a investment opportunity for an average consumer on our online platform. And what we discovered was that the real estate game is very antiquated and most real estate developers live in 1999. And now the opportunity is to get them into the technological revolution in 2025. And they move slowly. So in order for us to be able to stay in business and start generating revenue so that we could continue our vision, we had to meet our customers where they were at, and they weren't ready to go out to the public markets. They wanted help raising capital from the audience that they currently were looking to attract, which is the accredited investor. So after interviewing well over 100 different real estate investment sponsors that had different types of assets to offer all across the country, we came to a conclusion that instead of trying to push them directly into the public markets, we needed kind of like a stomping ground for them to start building relationship with our business. So what we decided to do is take a segue and build out a marketplace that could deliver value not only to the real estate development firm that was looking to find new accredited investors, but we also discovered that real estate investors that were looking to passively deploy their capital really had no place to go and find deals. They would have to go and sleuth them out on LinkedIn or, talk to their buddy that would introduce them to a person. And, at that point, you're just kind of investing because like, and trust. And that's great, but it doesn't give you the variety in asset classes. It doesn't give you the ability to compare sponsors and their background and track record of success. It doesn't give you the ability to compare different funds or syndications in the same asset class against one another so you can understand what's better or what's worse. So essentially, we created a marketplace where investors could come and take a look at all the different deals that exist on our marketplace completely for free. It's totally free to them. The passive investors also have access to us as a concierge, just like how when you call Amex and you need to set up a flight, you can call Relli and we will set up a meeting for you with the sponsor that you would like to invest in, or many sponsors that you want to learn about. Maybe you're not ready to invest, but you want to learn more about the different offerings. We're here to provide a concierge, white glove experience to those passive investors where we can show them a menu of deals, walk them through all the moving parts of what those deals look like, describe the structure so they can understand these deals in full, in a no pressure situation without trying to be sold, because we don't get commissions when they invest. Our only job is to connect them with the sponsor. And then we deliver a beautiful, super warm lead to our sponsor that now has a engaged audience for somebody that is interested in investing their offering because they've looked at our menu of deals and chosen that deal out of all the deals that they want to look at as a deal they want to do more digging into. So you have an engaged audience, and the real estate sponsors, they pay us a consistent monthly recurring service fee, and we deliver them 20 to 50 leads every single month by turning on advertising spend and managing that spend on our platform. So it's a beautiful win-win. We get to help both sides of the table, and then slowly but surely, we're seeing more and more of these real estate sponsors taking advantage of the public markets, and we're prepared to be able to go out to an audience of investors that are looking to deploy capital, but also with a solution that will help them take their passive investment and advertise it to an audience of people that they want to get in front of.
All right. So the way you guys monetize it is anybody who is putting a deal out on your platform, where you're charging them a monthly fee or like a piece of the equity for the deal. Like, how does that work for you?
No equity. So our goal is to be an unbiased party in this whole situation. And today, for the sake of de-risking the operation and building a foundation of 100 great customers that love our marketing services, we decided to focus on the marketing component of this engagement. So what our focus is creating an amazing platform where our sponsors can advertise their deal, and then we can supercharge their advertisements with different lead generation campaigns and email outreach campaigns to targeted investors. And what that does for us is, number one, we charge for a service. So the sponsors don't pay us a commission on the back end. There's no, engagement from the perspective of, a winning fee or a commission of any kind. And they get great services for a very reasonable cost. Now, we also do marketing campaigns like what I'm doing out here in Dallas for people that are looking to have a little bit more of an aggressive strategy. If they're looking to generate, 1,000 leads in 2 months because they need to raise 50 million bucks in 60 days, right? That's something that we can help with, but it's not going to be the same, monthly recurring service fee that we're trying to get 20 to 50 leads every single month for that sponsor. So different types of packages and services, but all of that being said, we have set up our business so that we don't take commissions, we don't take any GP splits, we don't take anything in regards to the winnings of the deal, such that we can be unbiased. We can vet all of our sponsors based off of whether we like the quality of their investment and the quality of their track record for our platform, not necessarily, hey, we need to sell something, so let's bring in this deal so that we can go find investors and sell them on the deal. Does that make sense?
Yeah, is it mainly commercial deals, or are you doing like single family like flips as well?
So we have a mixture of deals on the platform. You'd be surprised to see how many different types of offerings exist. So right now on our platform, we have, I want to say something in the range of 8 different asset classes that you can choose from. That's single family residence, that's multifamily syndication, that's double net, triple net lease retail to Walmarts and Starbucks and things of that nature. There's medical office facilities, there's debt investments, which are membership investments into debt funds, but also first position lien investment opportunities. We have an oil and gas deal on the platform. So we are agnostic to the deal, asset class, or structure. Our goal is to find investments that are backed in hard assets. And our goal is to find investment managers that have a proven track record of success. In most cases, for the real estate side, we look for exits in transactions, right? How many exits have you had in the last 5 years? How relevant are they to the business that you're looking to do right now and the investment opportunity you're going to deliver to our investors on our platform? Do your documents look kosher? Do your financials look within reason? Obviously, we can't guarantee an investment. We're not financial advisors. What we do is we go and have our general counsel and our CFO dig through these deals and make sure that these deals look solid, right? But we can't obviously judge whether they're good or bad. What we can do is we can say, okay, this sponsor has 20 years of experience. They have 10 exits. They have 3 funds under their belt. They're raising capital for their 10th deal. We feel confident that this person is a real sponsor with real track record of success that can deliver a service to our investors. At
And
which
so on
point,
your platform, are you giving the background of the actual sponsor themselves and like everything they've accomplished, and then also like here's the deal that they have, so people are actually investing into the sponsor as well as the deal?
that's correct. So the way that it works is we'll list a offering. That offering will be connected to the sponsor. The listing pages will show you in depth what the offering is. It'll have documentation attached to that offering such that you can pull out a offering memorandum or a private placement memorandum or any individual addendums that have to do with that deal that describe the investment opportunity in more depth. And then the investor can also look at the sponsor. They can connect with them on LinkedIn. They can see what they're all about. There's some information on their track record. What AUM do they have? What highlights are important about the sponsor? Are they audited annually? Do they have a third party administrator? Things of that nature. And then the goal is to help these investors connect directly with the sponsors without having to go find them, so that they can focus their energy on due diligence and feeling out the deal as opposed to finding a deal in the ether that is the marketplace.
So like everyone knows real estate investing is risky. Whether it's commercial, single family. How are you? I mean, I guess you can. Like, there's no way to actually like protect your investors, right? Like people that are going onto your platform and investing, you guys have done like certain due diligence to like hope that everyone's protected and everything's like above board. But like, there's really no way for like anyone to know like that they're risk free, essentially, right?
Well, I would definitely say that no investment is risk free,
Of
right?
course.
So any investment that you're going to take on is going to have risk. Otherwise, it's not an investment. And from the perspective of guarantees, there are no guarantees in investments either, right? Even if you go onto your Fidelity account, it's not FDIC insured. If you put your money into a whatever, a stock or a bond or whatever, and it goes sideways, you're at risk. Now, do you have the ability to then go after the sponsor, which is the business owner or the business that owns the stock that you purchased into? Yeah, of course. There's obviously going to be consequences to actions if there need to be consequences. But what I'll say is this: the market that is currently in existence for passive real estate investing is incredibly scattered and isolated based off of sponsors that have small communities, and each kind of run in their own silos. And what you'll notice is that even some of the best marketers in the space that have the biggest communities can also be the least qualified operators. So what happens when you have these private communities is you don't have a lot of open dialogue with the marketplace. So it makes it more difficult for you to know whether someone is of a high quality or not of a high quality. Our goal is to take a business that was behind closed doors for many, many years in an attempt to open up those doors. And what that means to us is it means taking the deals that normally were reserved for institutions in closed conference rooms and putting the sponsors that were in those conference rooms in front of massive communities and letting the world decide whether they're qualified or not, right? Because once you start getting those deals in front of people and people have the ability to then engage with one another about the quality of that engagement with that sponsor, now you have an opportunity to weed out the wheat from the chaff. But when everything is behind closed doors, you're reliant on whatever that person is telling you in front of you, right? So just to give you an example, one of the biggest things that we wanted to incorporate that we are now outsourcing to a group that we're very excited about is reviews. There is almost nowhere that you can go and look and see reviews on real estate sponsors from limited partner investors on their experience of the sponsor's communication level, the sponsor's quality of return in comparison to their projections, their team ability to work together and overcome problems. There's no place for that. However, there is a new technology that we're partnered with called Invest Clearly that we are integrating into our solution that has verified reviews from real LPs of the GPs that list their offering on a Yelp style platform. And the provider of that platform does the additional due diligence step of verifying that the investor listing the review has actually invested in that deal and has had an experience, right? So those are things that don't exist. And I think that they are kind of scattered, just like how the real estate developers are scattered in the way that they do business. And our goal is really to try to centralize. And we believe if we can centralize everything from the perspective of communications with the community, listings and offerings that people can see in real time that are open, not behind, paywalls or sign-in windows, right? Open offerings. If we can create a concierge service where we actually have a dialogue that's unbiased with the LPs, where we can educate them and be a brand where they know they can come to us and be educated. I think what happens is number one, from our perspective, we already, as an early stage company that just launched in April, get something between 4 and 8 leads every single week from real estate developers interested in listing their offerings. And the majority of those listings do not go on our platform because they do not qualify, right? So the more that we can get out into the community, the more that we can generate results because of these open investment opportunities. The more GPs come to us, the better we're going to get at underwriting, the higher quality the sponsors are going to come through, the less deals we have to do for our business to thrive. So in essence, we're creating a funnel for how do we get the best quality sponsors at the bottom of the funnel. And I think by doing that, putting their track record in front of everybody to see, listing reviews such that people have real engagements with real customers, and then putting them in a marketplace where they're compared to others, right? Because now they have to compete with their neighbor that might also have 10 years or 20 years of track record and a very highly qualified offering. Now they have to differentiate and compete, which, as we both know, competition in an open market creates higher quality businesses, right? So we're coming from the perspective that right now it's the Wild West.
Agreed.
And even though we don't have the ability to guarantee a deal, by centralizing the communication, by centralizing both parties to one place, by creating a process where we have a funnel of only the highest quality deals coming through the bottom of that funnel, we inherently create credibility, improve transparency, and reduce risk for the investors because now they have optionality. Unfortunately, I can't promise you that you're not going to lose money because real estate's a risky game, but you'll have a better chance.
What is, I don't know if you said, did you say what the minimum is for like someone to invest in deals?
So right now, so this is a beautiful thing. For us, we want to get it as low as possible. Our original goal was $100. And in order to do that, we have to go after a very unique offering. So right now, the offerings that exist on our platform, the lowest minimum we have, I think we have 2 deals with a $25,000 minimum. However, we are flirting with 4 or 5 different companies that have what's called a Regulation A offering, which is slightly different than what the real estate developers use today in Mass, which is Regulation D, focused towards higher net worth individuals called accredited investors. Regulation A allows average Joes like me to invest as little as $100 because it's a fully digital solution. So there's quite a few companies out there that have minimums of 1,000, minimums of 100, minimums of 500 that we're looking to get on the platform. So as soon as I have one, I'll let you know, but they're coming soon.
All right. What were your first 3 companies that you founded?
First 3 companies. Oh, that was fun. Okay, so the first one, I was brought into a startup called Pedal with my current business partner. His name is Relli. He's my ride or die. I do everything with that guy. And I had been in the automotive industry for a few years and got very fed up. And we met each other in the automotive industry working for BMW. And when I had left, he approached me and said, "Hey, look, I built an app with my buddy. I need you to help me sell it." So I said, "Awesome, let's do it. I'm available. I got time. Let's make it happen," right? I just left my job. I didn't have a next thing. I was like, all right, let's go. So we went on a journey of building our first tech startup. We had no idea what we were doing. Not a clue. Didn't know how to build tech, didn't know how to hire people, didn't know how to deal with expenses, didn't know how to do marketing. We were lost.
What did the app do?
So basically, we were trying to build a car gurus for leasing. So essentially, it was an online platform where we went out to a bunch of different car dealerships and we had them give us their loss leader and deals. And you're probably familiar with what those are. You go on their website and they have, a deal that's $399 a month for this expensive car, blah, 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 blah. And then all the fine print is like, it's only this one stock number. It must be this MSRP. You have this much minimum investment, blah, blah, blah. And what we did was we said, okay, dealerships, why don't you do this for us? Give us each one of those deals at a $0 down, nothing out of pocket. Give us those deals. Let us list them on the platform. Let us advertise them to the world. Let us drive traffic through the funnel. And what we did was we created an online platform where each dealership would have like their own investment page. And on that page, they'd have a bunch of little tiles where they'd have all their lease specials. And you could obviously see all those lease specials against all the other lease specials from the different dealerships. And you'd be able to click into the page and customize your lease payment based off of however much down you wanted, because we had a little slider that would go from $0 to $5,000 and you could see your payment in real time. And those cars were real cars with real deals, with 0 down, real numbers plus tax, because we couldn't, know where you live, but they were real, it was real deals. And we went out and we sold probably 30 cars. Nice. We offered the product for free to the dealers, which was our biggest mistake. I don't know if you've ever heard this before, but the only 4-letter word in business is free. And it's 100% true. So we went out to the dealers and I think I wrangled, 11 or 12 dealers. I was like, look, give us 3 months. We'll do it for free. We're going to get you deals. We're going to close business. We closed a bunch of business. After the 3 months, they came back and were like, cool. Thanks for the closed business, guys. See you later. And I was like, okay, because what happens is this, right? We gave them a product. It was no cost to the product. So they had no need for it to work or not work. So there was no investment from the dealer side. We did all the work. We did all the advertising. We created and updated all the deals. We flowed the traffic through. We picked up the phone. We drove the meetings. We closed the business. Now, our goal was to shift our model. We wanted to shift the model from what had existed in the market previously, which was mostly a per car fee. The car gurus or cars.com, if you go to their site and you see a car that you like, and then you show up at the dealership and you buy that same car, they track your movements such that when your name goes in the dealer's CRM, they trace that back to the original view from Car Gurus and then charge you $350 or whatever their number is. For us, what we wanted to do was give them a SaaS platform that they could plug in and add whatever deals they wanted consistently for $1,000 a month, which we thought was a smoking deal. But what we didn't learn was, well, there's a reason that all of our competitors were pricing on a per car basis, and that's because the dealers weren't particularly trustworthy, or we didn't know that they were actually going to deliver when we showed up. So what they did was they're like, look, we don't want any of your money up front. We just want to get paid based off of what we deliver. And when they delivered deals, they got paid. So we had inherent flaws in our pricing strategy. We didn't know what we didn't know as business owners, and we didn't exactly have the right team. So we put that business down. Unfortunately, it didn't work itself out. We learned a lot. But unfortunately had to close the business and pay off whatever debts. But me and Ross, who's my business partner until today, looked at each other and we're like, look, at the end of the day, it's me and you. Like, it seems like we're the ones that really care and want to put in the effort. What are we going to do to take our lives to the next level? And we read somewhere that the average CEO reads 50 books a year. Now, whether that's true or not, I don't know. But it seemed pretty sexy. I was like, all right, 50 books a year, that could be interesting. So I looked at Ross. I'm like, okay, well, how do we do this? He's like, all right, well, let's go do a podcast every single week. Who cares who shows up? We don't care. And this was 6-7 years ago. But we don't care who shows up. It's just for accountability. Every Sunday, we get on a call. We talk about the book. And we did that for 160 weeks straight. We read 160 books in a row. And through that process, we also built 2 companies with another business partner. And we built 2 companies simultaneously. We built a revenue generation consulting company where we would go into small businesses and help them build out their sales process within 3 months. And we also were working on a venture studio of sorts where we would partner with companies that had CPG products and help them scale their marketing and take a percentage of the business.
What's
and
CPG?
Say again.
What is CPG?
Consumer product goods. So, cosmetic goods and food products and things of that nature. And we discovered that although we started making money, we started seeing a little bit of revenue and things were moving, we discovered that the business partner that we had brought on wasn't the best fit for us. So me and Ross walked away from the business and kind of just left it to him and said, hey, we're going to walk away. And then we put our heads together and we decided to build Relli. And it's been a journey, man. It's been almost a decade at this point.
All while the second company that you guys had, not the one that you gave away, but the one before it.
The one before it. Well, they were both together. So the revenue generation company and the venture studio were with the same partner at the same time.
Got it. Okay, got it.
So we just wanted a clean separation from that partner, and we said, okay, you know what? You take this. Good luck, and we're going to go our separate ways. But actually, both of those businesses, I believe, still have value today. The venture studio, not as much as I think the sales consulting business. I don't know if you've experienced this before, but I'm sure you have as a business owner or as a business person. What happens with small business owners is you get a lot of salespeople or business people that worked for a big corporation that know how to do something really, really well, have a community of customers that want to pay them to do that thing, but get fed up with the corporate structure of working for Fortune 500 or, a big private business. And what they'll do is they'll go out and they'll build their own business around themselves. A great example is like, let's say a recruiting firm. You have a really good recruiter. That recruiter has relationships in an industry, and they have a tiff with their corporate office. They say, you know what? I'm going out on my own. I have my clients anyway. Who cares? So they'll go out on their own. They'll build their business. They'll start doing business. They'll start seeing that they have money coming in. Then they realize that running a business is a lot more than just selling a product, right? You have administration, you have insurance, you have operations, you have other people you have to rely on, you have vendors, you have all sorts of fun things. So they'll hire Jenny because they know Jenny and they like Jenny, and they know that Jenny has a little bit of experience doing operations. So they'll bring in Jenny and say, Jenny, please help me run the administration of my business. And they'll hand over the health insurance and the workers' comp and the EPLI and all the things. And then they'll slowly but surely add team members to fill in whatever gaps so that the owner can continue to build the business bigger with his ability to sell, or her ability to sell, or their ability to sell. And then they get to a point where they're like, oh my gosh, I'm exhausted. All I do is sell, sell, sell. And I got all these people around me, but I don't know that they actually can do their stuff. I got Jenny. She's reliable. She's trustworthy. But now she's extended beyond her reach, because she's not like an administrative lead that's highly trained or an MBA business consultant or anything like that. And now they're like, okay, well, I need to be able to take myself out of the sales role so that I can start building the business. And what they'll do is they'll go and say, okay, I'm going to go hire a salesperson. Cool. Let's call a couple people. We'll send out some form of ad. They'll bring in a bunch of people. A bunch of people will come in and say, I can sell anything. And then you bring them in 3 months later, there's no sales. You're like, hey guy, why is there no sales? You said you could sell everything. Oh, well, my network, they were in this industry and now I'm in this industry, and, they see me as this person, not that person. So like they're hesitant to do business with me. It's like, okay, well, you just sold me on all your network. So what are you going to do now? So okay, well, I'm going to go build up a new book of business. Well, most chances are that person hasn't built a book of business in a long time, or they just never have. And they just told you that they could sell and they could pick up the phone, but they don't know what they're doing. So the business owner struggles because they're naturally gifted at sales. They're naturally gifted at being able to tell someone, hey, trust me, we're going to do business together. Because usually the best salespeople are not good at CRMs. They're not good at emails. They're not good at administrative tasks. They're amazing people. And you can't distill that in a training program and give that to a college student and say, go be a perfect people person. It doesn't work like that, right? So what happens is they'll bring these salespeople in with no process, no systems, no foundation, no outreach, no technology, no lead generation funnels, nothing. And then they'll get upset at them when they don't produce. And you're like, dude, you gave them a phone, a computer, and like a prayer. What did you give them? You gave them nothing. So our goal would be to go in and say, hey, look, Mr. Business Owner, what we're going to do is we're going to do a 3-month sprint. We're going to take the time to understand what it is that you do really, really well, why it sells, distill that into a process that is not an art, but is a science that you can plug anybody into an ABCD process. And then we're going to ramp it up and we're going to show you how to build sales, because that's how you build a massive corporation, with systems and processes and a way to bring in a complete stranger off the street, ramp them up in 3 months and make them effective. So we would do that for small businesses, and that was very well received. So I'm very excited to hopefully see that come to fruition at some point, because I think it'd be really great for small business owners that have done really well for themselves because they're great salespeople or they're great, industry people, but haven't been able to transmute that into like a scalable business.
Yeah, it's smart. I come across that. I mean, maybe not every day, but at least like 2 or 3 times a week. All right, and so let's fast forward, and that actually kind of like goes into my next question. So like AI right now is like it's super fascinating to me. I've been digging into it for the past several months, and it's just mind blowing what AI can do. That business that you talked about, and then also Relli, like how are you guys incorporating AI into your business?
Well, there's a lot of stuff that's happening that we can incorporate. And actually right now we're working very closely with UCLA in a program where we have a couple students actually helping us with some AI technologies that we're trying to build that are going to help us in many categories. So what we've come to realize, number one, and mind you, first things first, our business is very much driven by traditional businesses, traditional industry, real estate, finance, and a little bit of tech, sprinkle the tech in there, right? And we're tech guys from the perspective that we've been building tech for the last 10 years. We use AI on a daily basis, but we've been hesitant to build AI into our business from an organic perspective because what we've learned and seen from all the different vendors that are in the space that are building AI is that things aren't working.
Yep.
And there are always going to be outliers, like the open AIs and the deep seeks and the lovables and you name it. There's always going to be the outliers that have a product that can deliver. But whenever you have a new industry, and I say that in quotes because AI has been around for a very, very long time, but it's gotten new steam, you're going to have a bubble, just like we had in .com, just like we had in 2008, just like we had, there's going to be, just like we had Web3, cryptocurrencies, right? There's going to be a bubble where there's going to be all this energy and hot air going into the topic, and you're not going to be able to pinpoint what's real and what's not real. So right now, because we have a foundationally strong business case and we can deliver services off of traditional technology, we're actively doing that while using AI technologies off the shelf to improve things that we're doing. So for example, we have an underwriting tool that looks at all the marketing collateral that our sponsors send us to give us insight on how that marketing collateral compares to SEC law. Now
Is
we
this
have certain
tool that you guys built, or it's off the
no,
shelf?
it's off the shelf, right? So it's another startup that we know very dearly that has offered us a beta opportunity to work with their platform because they understand that we're consistently looking at deals and need their service long term, and they're still perfecting their product.
You care to plug them, or is it proprietary?
Yeah, it's Warrant. They're phenomenal. Check out Austin. She is amazing. She's based out of North Carolina, I want to say. She offers a company called Warrant, Warrant. And her product, basically, you can ingest marketing collateral and it'll spit out analysis on how it compares to SEC regulations law.
Amazing.
So solid stuff, right? A really solid platform. On the other hand, we have tried now probably with 3 different vendors to integrate a AI chatbot on the platform that would be actually useful, right? Because most of them are glorified chatbots that we've had up until now for forever, right? Like, I don't need that. What I need is I need the ability for a chatbot, an AI chatbot, to ingest all the data from our real estate development firms that they've given to us that are on the platform and be able to regurgitate different things from the offering memorandums and the PPMs such that there's direct value for the LP looking at an investment deal from the chatbot. And what we've discovered is that because the chatbots just aren't up to snuff yet, and mind you, that's an internal problem from the perspective of abstraction of data is very difficult in AI, and quality is incredibly hard, right? So it's an industry problem. It's not necessarily a operator problem, if that makes sense. But because they have trouble getting past the 90 percentile for accuracy when it comes to abstraction, it's almost impossible to deliver that type of experience. In addition to that, the majority of the companies in the AI space are heavily deep tech driven. And the majority of the founders in the space are deep tech operators. So what does that tell you about their business style? It's focused on the infrastructure, not on the customer. So at the end of the day, me as a customer, they're building something that they think is going to work really well for the market. But me as a customer coming back to them and saying, hey, look, I need this to work this way. The engagement and the reception there isn't fully connected, right? They're not pushing back and saying, oh, okay, Mr. Customer, what's more important to you, this or that? Which
Yeah,
is,
they're focusing on the back end rather than the UX or the user experience. Yeah, I agree with you there.
And if you ask, so Steve Jobs had a very famous thing where he was on stage and a gentleman from the audience came up to the mic and asked him a question that was overwhelmingly technical, just to kind of drive a stake in him and say, hey, look, you aren't a developer, you aren't a coder, you don't know how these things imply on your business. And his response was very astute. His response was, look, guys, I run a business, right? We're here to be in business. At the end of the day, in order for this technology to continue to evolve and be alive, you need revenue to pay the bills, or you need to fundraise to pay the bills. We're a business. And the inherent flaw that most technology companies face is that they're tech people building infrastructure from an infrastructural perspective, instead of taking the infrastructure and then trying to create a product out of it. No, you start with the customer and you start saying, I want to fix this problem. This is the customer I want to chase and solve a problem for. And then you work backwards from the customer to the infrastructure. Because at the end of the day, if you don't have the money from the revenue, then how are you going to sustainably build a business? And that's also why Jeff Bezos at every conference room leaves one open chair for his customer, because the customer needs to always be in the room. And inherently there lies the flaw for us when working with AI companies. Now, again, we have, I'd say, 6 solutions that we use for AI, Warrant being one of them, an AI chatbot being one of them, obviously LLMs being 1 or 2 of them, and right now we're in the midst of trying to build our own underwriting infrastructure so that we can translate that into some form of AI tool that we can leverage within our business. But all of that being said, we're watching the market. We're trying to build a sustainable business model within the business case that we currently have, while watching the market and seeing, okay, this is working, this is not. These vendors are succeeding, these ones aren't. These technologies are capable of delivering on their promise, these ones are not capable of delivering on their promise. And I think by giving ourselves the ability to watch the first wave of these technologies come through, what we'll see is a couple outliers. We'll see a depression of the majority of the other AI technology companies that weren't able to get to market. And then we'll see a second wave of resurgence of really high quality technology. And we want to produce technology in the second wave. That's what we're looking for. We want to utilize what's working in the first wave, take what's working in the first wave, build upon it in the second wave, where we have a little bit more educated talent in the marketplace, where people aren't paying $100 million to bring on a talented technologist to build a product, right? It's not very sustainable for an average Joe startup founder. But in the next wave, when now the majority of technologists understand that AI is going to be a tool in their tool belt, now I can hire a more affordable technologist for my business as a startup to go build that AI technology without, completely kneecapping myself up front. But what I will say is as a company that has been raising capital and is at an early stage, we have definitely felt the pain of not being AI first.
Yep.
Because right now, I think investors are really focused on AI first, and look, I think there could be slightly to their detriment from the perspective that it's the shiny object. But at the same time, we need to stay true to our vision. We need to stay true to our mission. We need to stay true to what's working. And if we get distracted by the shiny object, because we wanted to build an AI so that the investors would feel great, that's going to take away from what's already working in our business today.
Yeah, I agree. Man, what an astute observation. So yeah, I appreciate all your insight into everything. Where can people get a hold of you?
On many places, you can check us out at relli.co, so relli.co. Platform's open, create an account, it's totally free. Check out all the stuff. If you're a sponsor and you want to list, we have that too. All the social platforms, we're at Invest with Relli. You can check us out on LinkedIn. Extremely active on LinkedIn. Me personally, Mor Milo, spelled just how you see on the screen. Mor first name, Milo last name. But yeah, we're always putting out content every single day. There's a new video coming out. Keep up with us. We're happy to connect.
Cool. Yeah, appreciate you being on more. This was an amazing show. Thanks again. And if there's anything I can help with, let me know. Okay.
Thank you, sir. I really appreciate that.
Yeah, absolutely. Have a good day, man.